Thanks for joining us here on the Savvy Investor radio show and podcast, now also on YouTube. Thank you so much for listening and watching. Today we're going to talk about reviving some of that dead money that you may have in your portfolio and putting it to work. Also, you're retiring. Great. But now what? Well, even the great Tom Brady has trouble adjusting to retirement. We're going to hear his words coming up. Of course, Mike and Ryan are here for you as they are every week to help you grow, keep, and distribute your wealth in the most tax-efficient manner possible. Mike Kinnett in the retirement hot seat today. Mike, how are you? It's great to see you as always.
Wonderful to be here with you today, Michael. Wonderful to be with you. I love the fall weather. We have we're going to get a little bit extra sleep here sometime. Well, maybe people who are stressed over retirement might not get the extra sleep, but a little bit extra sleep coming up. Yeah, I love the fall. I just absolutely love this weather. It's great for cooking. It's great for the final outdoors, and it's great for motorcycle riding. I just absolutely love it.
Well, you're a big biker too, so we appreciate that about you, as well as a lot of our viewers and listeners as well. But this happens twice a year. We move the clocks ahead. We bring them back. In this particular case, as during the time of this recording, it's Eastern Standard Time, and it returns this weekend. We roll our clocks back an hour, so we enjoy that extra hour of sleep, but we're going to have to pay for it in the spring, which brought me to this thinking. What do you got there? I see you kind of twitching a little bit.
I mean, that extra hour of sleep, first and foremost, you got to pay it back, and it's just like your retirement money.
Yeah.
Right? You get this semblance of I don't know, comfort, of peace of mind, whatever it is that, they've told you, put money away, save it in your retirement accounts, don't pay tax today. And that's exactly what we're doing now. You're going to pay for it later. You're going to pay for it today. And quite honestly, I would rather have the consistency of knowing that when I get to retirement, I'd rather pay the tax today on a smaller number than when I get to retirement and it's a bigger number. So you pay it today or you pay it later. I'd rather pay it today when I know what it's going to be like instead of in the future, because I have no idea what those clowns in Congress are going to do to our tax rates and our economy, for that matter. I mean, it's just so better the devil you know today.
Right. Well, hold on a second. Mike Kinnett, you are a financial planner. You're an estate planning attorney. You have a master's degree in tax, and you're also a 4-time Amazon best-selling author of the book. Right behind me right there, Nothing Certain But Death and Taxes. Can you see it? We're supposed to pay less taxes when we retire. That's what we've been told. So why worry about taxes in retirement?
That's kind of interesting. We teach classes all over the country, and I've talked to thousands and thousands, if not hundreds of thousands of people over the years about this whole idea. For some reason, we were sold this concept that when you get to retirement, don't worry about paying taxes during retirement, because when you get there, you're going to be in a lesser tax bracket. And my question is, why? The only way you're in a lower tax bracket is if you have less income, right? So why do you think that's a good thing? Why do you want to have less income when you retire? It's been my experience, and I've been doing this a long time at this point. It's been my experience that when you go into retirement, between the honey-do list, the bucket list, and the round-to-it list, you don't need less. You actually spend more in the first 10 years or so because of all those things you didn't get around to. And for most people that we work with, at least, it's interesting. They are so shocked that they were able to accomplish anything while they were working, because now that they're retired, they're so busy they don't have time to do anything except for all these things that So the only reason why you need or want less money during retirement is if you happen to be maybe paying off your house at some point early into your retirement. So certainly that house payment's going to go away. But the reality is, if you buy a new car every 5 to 10 years, you're probably going to buy a new car every 5 to 10 years. That's not going to change. And now you're going to be socializing and doing activities where before you're going to the grindstone and working 9 to 5 or whatever it was you were doing, because that's what a way to make a living, right? So I don't think my advice is that first and foremost, you do not want to have less income. Now, I do agree we want to be in a lower tax bracket, but those two things aren't necessarily the same goal, right? I mean, we want to have the same amount of income because we certainly want to have the same lifestyle, if not better. We worked all these years and literally made hard choices with our finances to make sure that we had enough money to live that retirement you want to have. And just like you don't want to lose 20 to 30% to stock market valuations and adjustments, why would you be willing to lose 20 to 30% to taxes every year? That makes absolutely no sense. And as you're listening to us on the podcast, or you're listening to us on the radio, or the Facebook Live, or wherever you're paying attention to this, if you're asking yourself that same question, if somebody walked in and told you, hey, don't worry about it, tax rates are going to be lower when you retire because you're going to have less money, first and foremost, you can smack them upside the back of the head. You have my permission. But then you should pick up the phone and give us a call at 866-597-1040, 866-597-1040, and sit down with Ryan and myself and our team, and we're going to show you how to have the income that you want and deserve during retirement so that you're not taking that pay cut that evidently everybody's telling you need to do. We're going to show you how much you're paying in fees, how much risk you're taking. We're going to talk about long-term care and estate planning. And folks, we have a little over 2 years left of the lowest tax rates you have ever seen in your life. You need to take advantage of them now. You need to create those strategies today so that when you finally are retired, or if you are retired, so that you don't continue to lose 20 to 30% to taxes right off the top, give us a call, 866-597-1040.
We have been seeing droves of listeners, of viewers calling in and taking advantage of that tax analysis that Mike is talking about. 866-597-1040, 866-597-1040. And that is complimentary right now for the next 5 Savvy Investor radio listeners, podcast listeners, YouTube viewers as well. 866-597-1040 and online at thesavvyinvestorradio.com. Again, that's thesavvyinvestorradio.com. You can also click on the links that you see there as well. And they're going to give you a complete tax review and put you through that tax analysis and make sure that you are tax efficient going into retirement. Again, 866-597-1040 and online at thesavvyinvestorradio.com. Mike, let's talk about business owners because we also have a lot of interest when it comes to business owners as well calling in. You talk about it all the time. Renters, a lot of landlords call you because they love it. They love the landlord business, but they're just tired of doing that.
So I think they like the idea of having grown their wealth through real estate because that certainly is a way you can grow. And I think a lot of them like the idea of that passive income because every month they're getting a check, kind of like, they're going to get their Social Security check. Hopefully, if they're fortunate enough, they're going to get their pension check every month. So they like having that check come in every month.
They just don't want the calls coming in.
Yeah. I mean, so that's a good thing. That's a good thing. But most of them do not like all the headaches that come along with it. And so what we've been doing for years with folks like this that love that type of income, that love the idea of owning real estate, but no longer want to own all those individual properties, there's all sorts of really cool tax strategies. And, for people that own property 10, 20, and 30 years, they depreciated it over that time period, which means when they sell it, the profit, the gain on it can be astronomical. And again, losing 15, 20, 25%, maybe 30%, depending on which state you happen to live in. That's a pretty big number to give up off the top. And maybe that's worth some of the headaches that you have to encounter. Our perspective is no, that's not true at all. And we had this doctor come into us one time. This was years ago, and he had a building and he had a practice, and he sold his practice and he sold his business, 2 different transactions. And as he's getting ready to prepare for this, fortunately for him, he saw us on television, and he decided to come in, just ask a couple questions. He got our book and he asked a couple questions, and he decided to come in because his CPA told him, go ahead and stroke that check it was a little over $1 million. Go ahead and stroke that check for $1 million bucks, because, you have the profit. That's just what you're going to do. And when he told me this, first of all, I had to grab the trash can and throw up because the idea of paying $1 million in taxes.
It's a big number.
Wow. It's against everything that I believe in. But we structured the deal for him. We had him make a couple twists, a couple tweaks. I mean, it wasn't like he was going to take the profits and go buy a $10 million house. He wasn't going to go buy a $10 million boat. He was going to invest that money to create the income streams that he needed to have during
He just wants his money.
Right. At the end of the day, just show me the money, right? Good old Jerry. So what we said was, how about we structure it in such a way that we can diversify your assets, we can have the building sold in such a fashion that you can still create that passive income. You don't have to be a landlord anymore, but you can create that passive income that you want, which was fantastic. We can sell the practice in such a way that you don't pay tax on it. Now think about that. You do not pay tax on that sale until you actually put the money into your pocket, and then only to the extent that you put your money in the pocket. So, for example, let's say you sold a business for, I'm making up, $10 million. The profit is $10 million. Under normal circumstances, you know, you're going to pay somewhere between, I don't know, $2-3 million, $4 million in taxes. That's a reasonable expectation depending on how things are structured. And your CPA or your tax person might tell you that. But from our perspective, because you only need $100,000 a year to live on, how about if we structure it correctly, you sell that practice for $10 million, you pay zero taxes upon the sale, and every year, because you sold it when you're, I don't know, 55, and you're not going to take Social Security till you're 70, every year from age 55 to age 70, you take out $100,000, and if we do it correctly, you know how much taxes you have to pay, Michael? Do you know how much taxes? Instead of paying that $3 or $4 million up front, how about we pay zero taxes for the first 15 years of your retirement?
Wow.
I think that's a great idea. One, you didn't take a pay cut going into retirement. Two, yes, your tax rates are lower, but because you worked with somebody who truly understands tax strategies. And if you want to understand how tax strategies, I mean, if you're a small business owner and you're thinking about selling your business and it's going to be more than a $500 to $1 million gain and you're worried about that tax implication and you don't want to give up 20 to 30% to Uncle Sam right off the top, I mean, think about this. You could choose to invest all $1 million in whatever it is you're going to buy, whatever you're going to invest in, or you can choose to invest $700,000 or $800,000 because that's the after-tax bill. I'd rather have $1 million to invest. And if that's where you are, if that's your mindset that you'd rather have that $1 million to invest, you have to give us a call at 866-597-1040, 866-597-1040. Sit down with Ryan, myself, and our team. And yes, we're going to show you how to create income streams that you will never outlive. We're going to talk to you about how much you're paying in fees, how much risk you're taking. We're going to talk to you about estate planning and tax planning. But folks, the best way you can protect your retirement is to not pay the taxes in the first place. Don't lose that 20 to 30% right off the top. Give us a call, 866-597-1040.
Again, that's 866-597-1040, 866-597-1040 for the next few savvy investor business owners, or if you're just you just want a tax plan, this is the opportunity for you. If you are concerned about higher taxes, now is the time for you to call in, 866-597-1040, and online at thesavvyinvestorradio.com.